Welcome back to the Robbins LLP podcast. Today, we're discussing new allegations involving the Simply Good Foods Company, ticker SMPL. A securities class action has been filed on behalf of investors who purchased Good Foods common stock between October 24, 2024 and April 8, 2026. The company sells consumer packaged foods and snacking products across its brand portfolio.
According to the complaint, Good Foods misled investors about the successful integration of OWYN, a ready-to-drink shake brand the company agreed to acquire for $280 million in April 2024. The acquisition closed on June 13, 2024. Defendants stated that integration was progressing as planned, and by October 2025, the CEO claimed the integration was largely completed and had gone well.
Plaintiff alleges the opposite, that the integration was a failure. The complaint states that Good Foods lost key managerial personnel necessary to integrate OWYN, impairing its ability to achieve the acquisition's strategic and financial goals. Plaintiff further alleges that Good Foods materially increased general and administrative spending to compensate for those departures, creating an inefficient organizational structure and unclear strategic priorities for the OWYN segment.
The complaint also states that a new pea protein supplier, introduced before the acquisition, caused significant product quality issues, affecting taste, texture, and shelf life, leading to negative reviews, depressed sales, and the loss of distributor relationships. Plaintiff contends that Good Foods attempted to boost short-term sales by offering discounts and promotions above historical levels, eroding margins without achieving a turnaround. And to stem margin erosion, Good Foods allegedly cut brand support and marketing for OWYN, further depressing sales.
The alleged truth emerged on April 9, 2026, when Good Foods reported second quarter results showing consumer consumption had plummeted across all brands. OWYN's quarterly sales contracted nearly 17% year-over-year. The company also recorded a $187 million impairment charge against OWYN's intangible assets and slashed its 2026 net sales outlook to -7% to -10%.
On this news, Good Foods stock fell from $14.41 on April 8th to $10.44 on April 10th, a decline of more than 27% over 2 trading days. Then, on July 9, 2026, Good Foods reported third quarter results and disclosed an additional $13 million impairment to OWYN, bringing cumulative impairments to $200 million, roughly 70% of the purchase price less than 2 years after the acquisition. On the earnings call, CEO Scalzo acknowledged the severity of the company's challenges, stating that Good Foods remained in the early stages of our turnaround and have significant work ahead. By the end of the class period, Good Foods stock had declined more than 70% from highs above $40 to below $11.
If you purchased Good Foods shares during the class period, you may be eligible to participate in the lawsuit. Some investors may also choose to serve as lead plaintiff, the representative party who helps direct the litigation. Representation is on a contingency fee basis. Shareholders pay no fees or expenses.
That's today's update. Thanks for joining us on the Robbins LLP podcast. Stay informed, and we'll see you next time.